Welcome to TradeTheMBI.com. This is John. This report is for the 7th. Oh, yes, a day that will live in infamy. In this particular case, I don't know if the market's going to do anything infamous because all we had was just a backfill of the extreme, moved above the warning line here off of this latest push. Fine, but with that cyan well underneath and the steel short-term buyers reset. Now, we are reaching that point right here, which is what we talked about, where we could end up with a DOC spread, which would be the cyan breaking above. The difference is that you're not going to have the steel crossing below as well to really force it. So all the people who are just threatening that the market's about to completely collapse are back at it again. Fine, that we're just not seeing that, but clearly 2613 is where the ABM yellow is from a daily standpoint. I think above that, as long as we're still having these kinds of resets and not seeing any major dramatic move of the orange back above spike levels, should be fine. NQ coming back just a little bit, shakeouts very close to the 0 point, so a move back above is not that out of the question. And again, when you're getting this kind of reset of everything into oversold and your market peaks, you're not doing that bad. I mean, I know it's hard for people to recognize, but again, there's still some roadblocks with taxes and whether or not certain deductions are going to happen in that. And so I think there's going to be a little bit of back and forth and a little bit of neutrality in where the market is until they know specifically. And when you see kind of moves that don't have any correlation to news, you'll know that the behind-the-scenes maneuvers are being discussed and people in the know are then making a move accordingly. So that's usually how that happens. And this is why. The news is always very late and why everyone sells the news, because it's already old news by then. Just because you think it's news, it's not. Euro. Moving down towards the bottom side of that upper range here, but still well above any concern for big pressure on the market. So not an issue. And then, of course, the flight to quality. This is just an insane level of TLT. It is an indication, though, that potentially some people are seeing soft patch, maybe, or the fact that there's just too much risk in their mind, and so they're seeking safety, even though the likelihood of rate increase is still there. If it doesn't happen, then that will be certainly a shocker. I think that would actually even help the market further. Oil was always a bit to the high side here. We knew that positive extremes have been filled in partway, but not all the way back to the next zone. And so when the first short came in right through here, you did get a reset of the steel. It was enough to hold it up for a while, but then we started trailing off on the midterm buyers here in green. And you can see right there, it's right about here that the flip took place, and you ended up with a DOC spread, and it was just a day later before it all started to fall apart. Not horrible. And gold continuing to be in a soft patch here off of the little short. Again, I think this some of this has to be attributed both to central banks as well as this whole cryptocurrency. Of course, you just saw there was a nice theft of some 50 million, U.S. denominational Bitcoin. There really is no actual value of that because you'd have to be able to convert it into something. That's a whole different issue that nobody talks about. If we turn to the 5K chart, you can see that, after our decline that we had, we based out. And again, as we got our buy signals and the rising shakeout, we got a little bit of a return, not a whole lot, but we're pretty much basing at this particular point. And every new signal, particularly and I like this one, when you see a move to 50% on the fib retrace, and then you get your buy signal, this is what we look for in general when we get to our peaks. 50% returns back up, 50% returns back up. Now the fact that the value changes slightly, not a problem. And you see that's where the algos are a little more reflective than this would typically be the 50% holding, but because we had the rise and then we reached right there, pivoted right around it, and then took off from it. And the range is narrowed so dramatically that it becomes a little bit less effective. It's when you have the broader ranges that it's a little bit nicer to see, because there's not enough point movement between some of these to make a difference. But that's all right. It's a good indication when you get that signal at a particular key level. Those are what I like to look for as strong confluences. So that's the basis of it. I think that we're probably still going to float somewhere around this 2320 to 2360 range for a little bit until we get some kind of passage of the tax bill, and or we know for certain where things are going to go rate-wise. And that, of course, we have the new money coming in a little bit later than normal here, and we'll see if it has enough impact to overcome the status quo. As always, though, trade well. I'm hopefully sounding a little bit better. Still have some lung congestion, but fever at least is gone, so that's a huge improvement from my standpoint. As always, though, trade well.